Hello and welcome to First Mover, your first look at today's action in Bitcoin, blockchain, and digital assets. I am Zach Seward. I'm filling in this week for Christine Lee, and joining me are my two co-hosts, Managing Editor of Global Capital Markets, Lawrence Lewitton, and Managing Director of International Content, Emily Parker. Hey guys, so we're in the Northeast. How about that big rain last night?
Oh, it was wonderful. Let me tell you, all that flooding in my basement. Usually in New Jersey, when you go in the basement, the worst thing you find is, I don't know, the body of somebody who didn't pay their debts years ago. This time, it was just a lot of water.
I hear rats can swim for 3 days without rest, so I haven't fact-checked that yet, but just in case you see any vermin floating
I'll let
around,
you know.
don't fear for their safety. They're going to be okay. Emily, did you weather the storm?
Yes, totally. New York City, at least where I am, is fine.
All right, good stuff. Hope you're all safe out there, and thanks for tuning in this morning. Let's get caught up with the markets. First, looking to the price of Bitcoin, Coindesk's XPX index is currently sitting above the 50,000 threshold, $50,054, up about 5% in the past 24 hours. Let's move now to Ether, which has been the star of the markets this past week. Ether currently sitting at $3,772, up another 6% in 24 hours. And lastly, let's go to the DeFi index. Coindesk's DFX is sitting at 730.25, up 2.5% in the last 24. All right. So those are the markets. Lawrence, I'm going to go to you first. Bitcoin above that 50K threshold. What does it say to you?
Yes. More buyers than sellers. And that is the case. I mean, we're seeing some accumulation on some of the exchanges, but the real interesting story is ETH. You want to talk about flood? Well, look at the flood of orders to buy ETH that we're seeing. The amount of volume that's been going on the 8 exchanges that we track at Coindesk, it's about 20% higher in spot volume in ETH than it is in Bitcoin right now. This has been over the past 2 or 3 days. So that's where the spot market interest is right now. It's still in Bitcoin, and it's very bullish for the time being. But really, the ETH's spot market volume has been spectacular.
Got it. And Emily, what's on your radar today?
Well, I think what's very interesting are these reports that Binance US may go public following in the footsteps of Coinbase. CZ, there are reports that CZ has basically suggested as such. Now, Binance US has been kind of a roller coaster of drama. There's been some, leaders departing rather quickly. Most recently, Brian Brooks. So, yeah, I think that's definitely a story to watch.
Definitely interesting on the Binance US front for sure. All right, thanks so much. We're going to take a quick break, and we will be back with the Coindesk Spotlight.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Bitcoin, Ether, alts, NFTs, oh my, they're all looking up this morning. To what do we attribute this rally? Joining us now to discuss is Bittrex CEO Stephen Stonberg. Stephen, how are you, sir?
I'm great. How are you doing?
I'm doing well. Great to see you. First of all, I want to talk about Bitcoin back over the 50,000 threshold. What's your read on the Bitcoin market? As Lawrence was alluding to earlier, Ether really has stolen the spotlight lately, but Bitcoin back over 50K would welcome your thoughts.
Well, I agree with his comments, but I think you're seeing a huge wave of new demand. It's institutional demand. You've got Walmart, Apple, Amazon. They're all exploring opportunities in the space. Fidelity and BlackRock are making significant investments in the space as well, and buying into Bitcoin mining companies, Marathon Digital and Riot Blockchain. And you've also got institutional money continuing to pour in to the Grayscale Bitcoin Trust. Morgan Stanley just added huge tranches of GBTC into multiple funds. You've got El Salvador, that they've got their Bitcoin law going into effect September 7th, where Bitcoin will become a currency, legal tender in the country. And the Deloitte's blockchain survey that just came out said that 75% of executives around the world see investing in crypto as something they have to do. So I think the last crypto back in 2017, when we had the big rally, I don't think you had this institutional involvement. In fact, they were calling it rat poison. They seem to have come a big 180, and now they're just coming in. So I think this is continuing to drive the price up.
I believe the term was rat poison squared, was Warren Buffett.
Yes, you're right. It was worse than rat poison.
Yeah. So Stephen, when you're seeing right now in Bittrex, are you seeing more ETH volume in the past few days? Though nonetheless, I mean, you talk about all these institutional interest into Bitcoin,
Yeah.
but are you seeing a lot more interest right now in ETH? And if so, are you seeing that institutional interest in ETH, or is it still mostly retail?
I mean, I think the thing with ETH, you have so many altcoins that are based on ETH. So it's not just the ETH itself that's driving the price, but with ETH, I think you have some of the same dynamics. I think institutions, when they're buying Bitcoin, a lot of them are also buying ETH. I think they view that as the next kind of, no-brainer store of value. But I think with ETH, you have other utility as well. I think you're seeing, huge price movements. The London hard fork in ETH was successfully implemented. And I think with all this interest in DeFi and NFTs, which there's huge demand, I don't think it's the same people that are driving that demand, but that's what, I think a combination of these factors are driving ETH. But, so it has all the same demand factors as Bitcoin, then it has all this sort of utility use cases, altcoin demand, DeFi demand that's also driving it, and this whole sort of decoupling.
But what are the sizes like in ETH? I mean, are they still relatively small compared to orders in Bitcoin?
I'd say, right now, on Bittrex Global, you're seeing, our biggest volume pair is, Cardano, ADA. So, which is, that's not a long-term trend. That's just what we've seen in sort of the last week. Right. Obviously, then you have Bitcoin pairs, and then obviously after that, you have ETH. So, ETH still hasn't on our exchange, hasn't overtaken Bitcoin in volume, but it's growing in volumes.
Stephen, the other big star of the show recently has been Solana. Can you tell us a little bit about that? What's going on with Solana? Why is it broken out so much recently?
Well, you have high transaction speeds, low gas fees. That's really given Solana a major buzz. Solana has risen 67%, or SOL, the token, in like the last week. The market cap is now 40 billion. Since the beginning of 2021, SOL has grown a staggering 6,800%. So I don't think when you go to Morgan Stanley in their normal asset management business, there's not a lot of assets that have that kind of performance in a portfolio. So, it's just huge demand. I think Solana is really emerging as a serious competitor to ETH. For some of the issues that ETH has, they don't have them in Solana. So I don't expect to see that kind of continued, parabolic growth, but it seems to be here to stay.
So any idea what the next Solana might be, or some other coins to be looking out for?
I think Cardano. I don't think it's going to have parabolic growth, but that ADA has been seeing its own incredible gains ahead of the Alonzo upgrade. Polkadot, Avalanche have also seen huge gains as well. So I think what's interesting in crypto. It's not just all about Bitcoin and ETH now. It's hard to pick the next winner, and obviously there's such volatility that a lot of these things can fall as quickly as they've come up. So I would still caution investors on this, but I think this space is exciting, and you're going to see a lot more interesting tokens this year.
So in general, how would you break down your user base? Are they mostly in retail, some institutional? What are we looking at here in terms of how you see the flows?
So with Bittrex Global, so we're the non-US part of Bittrex. There's Bittrex Exchange, which has US residents and clients. We have no US passports, no US residents. So within that, so it's global retail and global institutions. But I'd say both are important, and we're seeing a lot more institutional accounts coming onto the exchange. So I think there's been a lot of noise with some of our competitors, who shall remain nameless, about their regulatory standing, and obviously institutions who have compliance departments really care about that. So in our case, our exchange is fully supervised by the Liechtenstein bank regulator, the FMA. That's an EU bank regulator. So we're under the Blockchain Act in Liechtenstein. We also have a secondary license in Bermuda under the BMA. So everybody has been KYC'd, AML'd on the exchange. So institutions like that. Liechtenstein is a AAA rated country. Swiss franc is the currency. So it's an incredibly stable legal jurisdiction. And unlike some exchanges, we're very happy to say we do operate in Liechtenstein under the law there. We're not sort of in outer space or wherever, not nowhere and decentralized. It's a totally centralized exchange.
I wonder what exchange you're talking about.
I couldn't possibly comment, but I think that it's playing very well in the story. We've seen a lot of institutions who maybe didn't care or just went there for the volumes. They're really panicking, and a lot of sort of the newer institutions that are more conservative that are coming into crypto. This stuff is hugely important. So I always say that the tortoise wins the race, not the hare. So hopefully we're sort of the regulated tortoise is doing well. With 311 tokens still listed in over 900 pairs for a regulated exchange. Is a pretty interesting proposition. So we're seeing a lot of institutional interest, obviously in retail as well.
You mentioned some of these newer base layers that are sporting some pretty attractive DeFi applications at this point in time. On the institutional side, are you seeing any evidence that these institutions that are buying some of these DeFi assets are actually using them on some of the lending platforms that exist now on Avalanche or Solana or some of these other base layers?
I think there is some use in it. I think probably, and again, this is all just a hypothesis. I think it's probably more just it's speculative in their investing. I think some of the institutions are actively involved in lending, but probably it's going to be more in Bitcoin and ETH and some of the more liquid coins, especially if you have hedge funds that are coming in. They're not going to be able to dabble in really illiquid markets. They're going to look for liquidity. But I think, again, over time, as some of these altcoins become more mainstream, you'll start to see more institutional interest in them.
Do you see the institutional traders sort of paying attention to these incentive programs that we're seeing from these various base layers? I know Avalanche had a big one with $180 million trying to get liquidity mining going. Are people paying attention to that stuff, or is that more for the hardcore crypto natives at this point?
No, I think what's interesting is some of the traditional people are becoming hardcore crypto. I mean, look at FTX's last funding round. I mean, you had Paul Tudor Jones, you had Brevin Howard, Alan Howard, and Brevin Howard's very active in crypto. They have a whole crypto arm set up. So I think a lot of these traditional finance guys are really getting into crypto. Not all of them are calling it rat poison squared. Some of them see the opportunities. And again, they're arbitrageurs, they're speculators. They'll just trade in and out of these markets, but they've dedicated a lot of long-term resources into this market, and not just investing in the markets, they're investing in the cap table of some of these companies. So I think you'd be surprised at who's now investing in this, which is why they care. Like, they have really strict compliance departments, these companies. So they can't trade on some company that says they're under no law and in outer space. It just doesn't work in the real world. Right? That only works with the crypto people.
Stephen, I appreciate your perspective from wherever you are. Thanks for joining us today. And we'll hope to have you back soon. Thanks so much.
Pleasure. Thank you for having me.
Awesome. That was Stephen Stonberg of Bittrex. Coming up, we're going to check in on the Asia crypto markets. Stick with us. It's First Mover. Hi there. Time now for the daily forecast to see what's happening in the Asia crypto markets. Here is Angie Lau of Forecast News.
Welcome to the Daily Forecast, September 2nd, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. India's stance on crypto has been high on our agenda for a while now, and it looks like there could be a change of heart underway. Some major crypto exchanges are now actually able to offer deposit options with big banking names once again. It's a huge reversal from what happened earlier this year, and we're going to talk about that and a whole lot more coming up. So back in May, we saw banks citing an outdated 2018 circular from the Reserve Bank of India to demand clarification on crypto transactions, despite the fact that the RBI stated that was no longer valid. Most crypto exchanges were left unable to offer deposits via net banking, debit, or credit cards as a result. But now, crypto seems back on track in India, with WazirX offering deposits via banks including Indian Overseas Bank, IDBI Bank, and Punjab National Bank. But there's still tension. Not all the banks are on board, and there's the pending legislation to ban crypto altogether still waiting in the wings. Forecast News' Monica Ghosh has this report from India.
The RBI issued a statement in May this year clarifying that its 2018 circular had been struck down by the Supreme Court in March 2020. But despite having the authority to do so, the central bank didn't directly issue instructions to banks saying they should resume offering services to cryptocurrency businesses. But some well-known banks are now supporting net banking services, and crypto exchanges WazirX and Coindesk, which turned unicorn this year, are both now allowing customers to deposit money via net banking from some banks. However, it's still just baby steps. Some of the biggest names, including ICICI Bank, HDFC Bank, and State Bank of India, are not among the options as yet. So while India's crypto bill awaits a cabinet nod, the regulatory scene remains muddy. For Forecast News, I'm Monica Ghosh. Pune, India.
Meanwhile, the cryptocurrency market has rallied this week, rising over 6.5% for a total market capitalization of $2.23 trillion US dollars. Thursday morning Asia time saw the second largest cryptocurrency, that's Ethereum, reach its best levels against Bitcoin and the dollar in more than 3 months. Ether's price jumped above 3,800 US dollars despite a day of sideways price action across the broader crypto market. Forecast News' Lucas Caccioli has the latest on what's driving its price higher.
Ether's price has been on a general upward trend since a little before the Ethereum network's London hard fork at the beginning of August. And Ben Caselin of AAX Exchange told Forecast News that could be set to continue, with the possibility of Ether hitting 5,000 US dollars in the next couple of months. Why? Well, Caselin says that for the moment, Ethereum's rise is to be expected, as it's still the preferred platform for issuance of stablecoins, NFTs, and DeFi. But with swift developments from the likes of Solana and Terra, he warns that position could not be taken for granted over the next year or two. But while the hype over NFTs and other innovations that are closely tied to Ethereum and similar platforms continues, those who are not looking to make a quick buck are still accumulating Bitcoin. A case of the tortoise or the hare in terms of investment strategies, maybe. For Forecast News, I'm Lucas Caccioli.
And finally today, Ethereum isn't the only market winner at the moment. Crypto exchange FTX's token FTT is also on a roll. According to CoinMarketCap, it broke its previous high set back in May before the market crash and hit $66.33 Thursday morning Asia time. The price has jumped 40% since FTX's acquisition of the crypto derivatives platform LedgerX earlier this week. It's not been revealed how much that deal cost FTX, but the exchange says it will allow them to expand its product offerings to include futures and options trading in the U.S. So could an IPO be next on the cards here? I spoke with FTX CEO Sam Bankman-Fried earlier this year for our show Word on the Block, and he told me they're definitely exploring.
We'd be crazy not to be like doing due diligence on it, right? Like, we don't have any concrete plans there, but we're learning what we can, and kind of doing our homework.
And you thought Coinbase's direct listing was exciting? Stay tuned. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
Welcome back. Let's check on the coins again. First to Bitcoin, the Coindesk XBX index still over 50,000, $50,120, up 5.5% in the past 24 hours. Now on to Ether, 3,780, up another 7% in the past 24. And lastly, Coindesk's DeFi index is sitting at $729, up over 2% in the past day.
The Coindesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Play to earn crypto games are in the spotlight today among users and regulators in the Philippines. Regulators there looking to tax potential earnings from gamers earning crypto from games. What does it all mean for game developers and players and people investing in this space? It's lots to unpack here. We're looking forward to it. Joining us now to discuss are Beryl Li, co-founder of Yield Guild Games, and Miko Matsumura, who's the general partner of Gumi Cryptos Capital. Hi, thanks so much for joining us today.
Hi.
Hello.
Beryl, I want to start with you. Really interesting model here with Yield Guild Games. I know one of your colleagues has described it as part Berkshire Hathaway and part Uber. Talk to me about your model and how it relates to this rising phenomenon of play to earn.
Okay, so maybe I'll tell you more about Yield Guild Games. We're a gaming guild that's structured as a decentralized autonomous organization. Primarily, we invest in gaming assets in the form of NFTs, focus on play-to-earn games, and we look into lending them out to our community of players.
Got it. So do you take a cut? Like, do you get a percentage of the earnings after you lend out these assets to players? Is that the primary way that you're generating returns? Or talk to me about that. Is it just the appreciation of these assets that you invest in? Really curious about how YGG sees itself making money.
Yes, so we actually loan our assets as a non-collateralized forms of loans to our community of players. And whenever the player actually uses these assets within the game, they end up earning in-game rewards. So as an example, with Axie Infinity, they need 3 gaming assets. They use that to battle with in the game called Axie Infinity, and they earn Smooth Love Potion, and the players earn from they end up like cashing out from 400 to $1,000 US. Now, Yield Guild Games that actually ends up like breeding the assets, handles custody. We keep 10%. 20% actually ends up with their manager who helps onboard the player, and 70% just stays with the player themselves.
Got it. So this has created like a pretty thriving economy in short order. Miko, I want to go to you. I was looking at our past coverage and we covered that first round way back in March of this year. It feels like so long ago. And you were involved in that investment. Talk to me early on, before this really sort of clicked with the mass imagination, why this seemed an attractive investment to your firm.
Yeah, so Gumi Cryptos Capital got very excited. I've known Beryl and Gabby, her co-founder, for a number of years. But I think for us, the thing that got us excited is that we think that gamers is 3 orders of magnitude larger than current crypto population. So, there are literally billions of gamers here, and we think that this is really a huge growth opportunity.
Question for Beryl. So I understand that your center of gravity is kind of in the Philippines, and the Philippines has also been home to Axie Infinity, which has just been like going gangbusters. So what is it about the Philippines specifically that is become like the center for this sort of gaming universe?
Right. So Axie Infinity really clicked during the pandemic, during the COVID lockdowns, and that is due to a lot of people losing jobs. So before the COVID pandemic, there was already a 20 to 30% underemployed, sorry. And due to the pandemic, a lot of people who've been working as drivers, factory workers, those that actually do mostly like physical labor with no savings. They're desperate for another source of income. And here comes Axie Infinity, where you could actually just spend your time at home as long as you have a mobile phone and an internet connectivity. You can end up like playing, and you actually end up like spending more time with the game, and you earn more in-game rewards if you actually win. And this in-game rewards in the form of crypto could actually be cashed out with regulated exchanges in the Philippines, and they could actually turn that into fiat currency in Philippine pesos. And this is what our players actually use to put food on the table, buy milk for their kids. So it's grown quite significantly in the Philippines.
I understand that the Philippine government, though, is actually looking now to tax players of Axie Infinity, and what do you think that means for the gaming world? That seems like that could be a pretty significant development.
So I think like at this moment, the government is actually evaluating the taxes right now, but then because it's actually a form of income, the government is actually like pushing that people have to pay income taxes, but then it's quite a challenge because you're asking tax from a group of people who've never really had savings in the past, and they've never really filed taxes as well in the past, right? So from a minimum income or people who are unemployed in the past, now is actually like earning more than the minimum wage in the Philippines, from 400 to $1,000 per month. Compared to the base, the minimum wage of $200. So I think there's a lot that regulators would have to do. to kind of educate the players as well on how to navigate, the taxes. There could also be an exploration of incentives as well, just because the industry is still really new, play to earn, and because the Philippine economy is, we've repatriated OFWs, our main source of GDP in the country. The main source of income right now could actually be through playing games, and I think the government should actually encourage more players to look into it.
Beryl, a country a little northwest of the Philippines is a tiny country called China. They've recently cracked down, or they're going to start cracking down on kids using gaming down to 3 hours a week, which is about 1% of what most children do these days. Is that going to affect your business at all, or are you not seeing any volume right now out of China?
So at the moment, we're really focused on emerging economies. So mostly we have players from the Philippines, Indonesia. We're currently in Latin America, primarily Venezuela, Brazil, Peru. We also have some players from India.
Miko, I'll take this one to you. I mean, I think that you mentioned this, right? The opportunity around gaming is quite large, especially if there's these extra incentives to get you coming back for more in terms of real world economic value. I guess, taking into what Lawrence asked with sort of these regulatory crackdowns potentially looming in some pretty big markets, but then zooming out to the rise of the metaverse and all this play to earn activity, where do you see this subsector of the crypto world going in the next 6 to 12 months?
Yeah, this is really a huge shift. We think that this is part of what we call the ownership economy. So previously, all economic models have been extractive. So basically, that people have been seen as resources and users are seen as things that you extract money from. So the ownership economy is something that produces yield, because if you're an owner, you get yield. So this is really about sovereignty, and it's about freedom, and I think it's why you see things like China crack down, not just on Bitcoin, but on gaming itself, right? So as far as where do we see this going, we see YGG as being the first metaverse labor union, and we see it as really being a central hub in terms of not just Axie Infinity, but of course, all emerging blockchain games, play to earn, and with these new incentivized economic models. So extremely exciting.
So Miko, besides YGG, where else are you deploying capital? All due respect to YGG's fantastic work.
No, absolutely. We were an early strategic round investor in OpenSea, which I think recently did. They're bigger than Etsy now in terms of their, total volume. So OpenSea has been fantastic. We also have an investment in Celsius Networks. So we've been deploying across CeFi, DeFi, 1inch is another one of ours, as well as NFT and gaming. We do see a tremendous future in this next billion users coming from this play to earn gaming phenomenon, and of course, YGG is really a shining star in this emerging capability.
Interesting stuff. New frontiers in economic adventuring. Thanks so much, Beryl. Thanks so much, Miko, for coming on to First Mover today. Thanks so much.
Appreciate it.
That was Beryl Li of Yield Guild Games and Miko Matsumura of Gumi Cryptos Capital. Coming up next, we're going to talk about Binance and BitConnect back in the news. We're going to chat with Nick Day about the latest on the regulatory front. Stick with us. It's First Mover. Hey there, welcome back to First Mover. It is time to check in with Nick Day. He is Coindesk's Managing Editor of Global Policy and Regulation. Good morning, Nick. Hope you fared well in the storm last night. How are you?
I'm good. Luckily, nothing too bad here. Hope same to you.
All right, thanks. Thank you so much. All right, we're here to talk news. Let's get to business. We're talking about BitConnect. They're back in the news. The SEC did some stuff to them. What's the latest on the BitConnect front?
The SEC filed fraud charges last night, basically alleging that the founder committed fraud over the course of BitConnect's lifetime, stealing effectively about $2 million from investors and converting them for personal use rather than using them as part of a high-frequency trading program that he advertised to people who were interested.
Broadly, this is the SEC settling old scores. This activity occurred, 2017 through 18, 19? Talk about the timeline here and what it means about the long arm of the law.
Yeah, no, BitConnect shut down in 2018 after getting some cease and desist orders from various U.S. state regulators, not even the SEC, but states were saying, hey, we're concerned about this, that we think it's violating securities law. So BitConnect shut down well over 3.5 years ago. And, the SEC has brought charges against some promoters in the past, but I think this might be the first time it's bringing full charges against the actual founder of the company as well as the company itself. And there were some additional charges against another promoter and his company, but the SEC's timeline appears to be long. It does not move as swiftly as I think some had hoped.
So, Nick, speaking of state regulators getting involved in crypto, we saw Chris Giancarlo quit BlockFi after several states are investigating that company. Tell us a little more about that.
Yeah, this was first reported by our colleague Danny Nelson. Chris Giancarlo, the former CFTC chair, has stepped down from the board of BlockFi, although I understand he is still operating in some kind of advisory capacity at the moment. So it's not like a complete clean break. He is still, loosely affiliated with BlockFi. BlockFi is currently still, facing legal challenges from 1 in 10 U.S. states. There are 5 different states that have brought, either said, hey, we think you're violating securities law, or, said, hey, we have a lot of really serious questions about this. Please talk to us. There was supposed to be a cease and desist order enacted by the New Jersey state regulator, the first regulator to bring, a complaint, but this has been pushed back to the end of September. So BlockFi has another month to continue, discussing with the regulators, what they believe their platform does versus what the regulators claim it does, and try and say that the BlockFi interest accounts do not violate state securities laws.
Quick riff on the 4-month thing there. So Giancarlo out after 4 months. Let's go over to Binance US, where former regulator Brian Brooks was also out after 4 months. Now we get word that Binance US is, I guess, taking its plans to go public a bit more seriously. What's the latest on that development overnight?
Yeah, Binance CEO CZ has said that he hopes Binance US will IPO in the next 3 years, I think is his timeline now. I think 3 years is a lot of time. Anything can happen, but certainly at the moment, Binance US is in a bit of flux. It has a temporary interim CEO after former CEO Brian Brooks stepped down. I think it's really going to depend on how Binance, the global exchange, fares with all the different regulators that are saying, "Hey, we are concerned about your operations." I think Singapore just most recently in the last couple of days announced that it is looking into Binance and has concerns. So if Binance US is to go public, I think that the SEC and possibly other regulators in the US are going to take some ask some serious questions about its affiliation with the global Binance exchange and whether or not these operations are going to pose a risk to the broader US financial system.
All right, thanks, Nick. I'm just still thinking about 3 years as a viable time. That's a lot. That is a really long time.
It's a long time. Yeah, anything can happen.
I don't even know. There could be just wow, all sorts of things could happen in 3 years.
A good 15 to 20 CEOs.
Well, he'll be here all week. In fact, he has been here all week. Thanks, Lawrence. Thanks, Nick. That's Nick. He is our managing editor of Global Policy and Regulation. He's a great guy. You should sign up for his newsletter. It's called The State of Crypto, and that's how you stay plugged in on the latest in the brewing regulatory battles here in the US and abroad. That's it for the First Mover Show today. I am Zach Seward. We had some great co-hosts today. We had Managing Director of International Content, Emily Parker. We had Lawrence Lewitton, Managing Director of Global Capital Markets, who was here between shoveling out his flooded basement. So thanks, Lawrence, for doing that. Sorry so much. And I'm Zach Seward. I'm rambling. I'm going to wrap the show here. Coindesk TV has more stuff, though. At noon Eastern, it's The Hash. And then at 3 p.m. Eastern, it's all about Bitcoin. So stick with us on Coindesk.com throughout the rest of the day. I'm going to go. I'll see you later. It's been fun. See you, everybody. Bye.
Come by and bring a bucket.
I'll be there in a bit.